Happy February, everyone. Welcome to Introducing MooMoo FX, an exclusive webinar to introduce our latest Forex features. And we'll do a live demonstration on the MooMoo app on how you can open a MooMoo FX account and place a trade. Once again, I'm your host, Olivia Higgins. Now, while we wait for a few more people to join us, here's a video just for you. Enjoy. Welcome back, especially to the people who just joined us. Once again, you're with me, your host, Olivia Higgins. And remember that we're here to equip you with the educational tools to help you make better investment decisions. So get ready to learn today. Today, it's all about Forex trading and how you can do it on the MooMoo trading app. And we want you to be a part of the discussions. So at the end, save your best questions as we hop right into Forex for today. Now, it's really about the community discussions and all the questions that you had about Forex. So we listened and we curated and crafted this exclusive webinar just for you. So today we'll learn what's new and available on the MooMoo app. Now, as we mentioned in the previous live webinar that you joined us for, we want you to be a part of this journey of, taking charge of your 2023. So we've listened very carefully to what you want to know about. And so today it's also about the exclusive demonstration of the live tutorial on how you can place the trade. And as always, this is a two-way learning experience. So save your best questions for the end. Today with me, very exciting, from MooMoo Singapore, let's welcome Managing Director Gavin, Chia, and Assistant Dealing Managers Brandon Ng and Samson Ng. Hi, gentlemen.
Hello, Olivia.
Hi, Olivia.
Hi, Olivia.
Hi, welcome to the show. I know for Brandon and Samson, this is your first time, so it's great that the audience can finally see your faces. Now, tell the audience a little bit about yourselves and what to expect from today's topic of introducing MooMoo FX. Let's start with Gavin.
Yes, sure. Thanks a lot, Olivia. Very happy to be up on your show again. Today, on our side, based on the demand of clients and catering to all the tech-savvy investors, MooMoo Financial Singapore, we are very glad to announce the launch of the newest product, FX, today. And keen investors, they can place currency pairs trades with MooMoo SG to enjoy institutional class liquidity and also greater efficiency, as their orders will be executed through, we call it STP, but just to lengthen up, the STP is actually straight through processing technology. There's no trader, very little human intervention over here. So it's all routed to all institutional and to the banks itself.
That's great. Thanks for sharing. What about you, Brandon?
Hi all, my name is Brandon. I'm a FX dealer for close to 13 plus years in the financial market. Yep, glad to be able to serve you all, and hope that we have an enjoyable day today.
I'm excited too. What about you, Samson?
Hi, everyone. My name is Samson. I've been in the finance industry for more than 15 years. So glad to see you guys. Hope you enjoy the show.
Yes, it'll be a great one. Now, I've got a key question before we go into the sharing. Now, why is FX important, and how can the MooMoo app guide and assist current active users invested in this space?
Yeah, so for FX itself, it's a very important tool in our everyday life. Including this everyday life, you will use this FX, and including businesses, SMEs, NMCs, and even big corporates. They will all use FX as a hedging tools to book their profit and do the exchange rate accordingly. Yep. And how does the MooMoo guide them? Actually, for Forex itself, you're able to view the live rates on the MooMoo app itself. At the same time, you're able to also trade using the MooMoo app itself.
Okay, we'll share more later. With that, we're about to have an exclusive official announcement for you. The floor is yours, Gavin.
Thanks a lot, Olivia. I mean, yes, I mean, as shared, I mean, based on the demand of clients, MooMoo Financial Singapore is glad to announce the launch of the newest product, our FX today. And, all investors, they are able to place currency pairs trades with MooMoo SG and to enjoy institutional class liquidity and also greater efficiency. I mean, if you look at, the turnover in global FX itself, just a daily FX, we are talking about 7.5 trillion per day. And, there will be massive liquidity on our side, tight spread, I mean, and many pairs for clients to choose from. And of course, like what Brendan had shared, trading FX has many usage in different part of business. And we believe the demand from a lot of retail clients, we heard a lot of requests, and we are very happy to actually launch it out today. A lot of hard work to the guys, everyone involved in MooMoo SG in terms of the FX team.
Great stuff, Gavin. So is there anything else that you'd like to share regarding the direction or even just the company's choice in helping the current active investors and also the future ones?
Sure. I mean, I think we will segment quite a number of levels in terms of clients. We also know that we may have a lot of clients that is actually very new to FX, as much as they may have heard of FX. So there'll be a wealth of education materials. Users, they can watch tutorials to have a better understanding of the latest trends, risks associated with FX trading. Empowering them to make smarter investment through portfolio diversification. I mean, also holding a variety of asset classes even while on the go. I mean, to put it on layman terms, I think a lot of those experienced traders who trade FX, they will know that technical analysis will be a very important aspect. I mean, looking at a 1 minute chart, even 5 minute charts. These are things that surely we will add into the educational materials. And of course, especially for those very keen FX traders, they can also take advantage of the product launch with in-app educational video contents to perfect their trading theories. Because I believe when I spoke to quite a number of friends, there's always how they look at different things based on their perspective itself. So, we believe in terms of our MooMoo apps, it will be a place where they can test out their theory, their trading theory, and whether is it on fundamental or mainly technical, we will be able to play a part in that and accompany them in terms of their FX investment journey.
You brought up an important point about portfolios. Now, as we see the current revelations in the market, a lot of people are looking at reallocation or re-strategizing, right? So how can this new announcement be a part of complementing their current change in strategy?
I think this is a very good question. If you look at a lot of pairs, they work, why we call it a pairs, because if you look at FX trading, they will go by two currencies. And of course, if you look at the main currency in the world, I mean, whether people are buying commodities, selling commodities, it's all based on US dollar. So, with this, influx, outflux, softening of US dollars, that will actually mean a lot of things, or even a strengthen in terms of US dollar. So, there's a lot to share. I mean, from an FX, fundamental point of view, in terms of how the currency will work. So I mean, even interest rate on certain pairs. These are things that we are actually looking forward to share with clients. Of course, as shared, I mean, in terms of FX traders, we understand that there will be traders from or even clients from different levels, and we are there to accompany them to actually reach different levels itself.
Thanks for sharing that. Well, we're already getting a lot of questions on this topic. Now, Gavin will answer some of these questions from the audience later on in the show, so we'll be back with you very shortly.
Sure, no problem, Olivia.
See you soon. We will now explore the fundamentals of Forex trading and all you need to know and how you can understand its core and use it to complement your current investment strategy. Now, I'd like to invite Samson back onto the floor. Take it away, Samson.
Thank you, Olivia. Okay, I hope that today's sharing session will be beneficial to those who are keen in trading FX or have little or no knowledge on that. And for those that trade FX before and do not understand some terminology of FX, this will be a good chance for you to have a better understanding. Slide 2, please. Okay. Okay, basic of FX trading. Let us first take a look at the diagram showing EUR, USD will stand for Euro dollar, which is one of the most common trading symbol for FX. Euro stands for the Euro currency that is used by the European, while USD stands for US dollar. Typically, FX trade is made up of two currency. They trade in pairs, buying a currency and selling a currency concurrently. And the first currency, Euro, that appears in the pair is known as the base currency, while the second pair, USD, is called the quote currency. A real life scenario for you to visualize, you are going to travel overseas. You need to exchange your local currency to that of the destination country currency. Trading FX work in quite a similar concept. And how do we look at the price at FX? Let us look at the first example. Euro dollar at the price of 1.07235. It means that you are using $1 to exchange for 1.075 US dollar. Another example you can look at is the dollar yen, which is dollar against the Japanese yen, is at the price of 131.195. Means that you are using $1 to exchange for 131.195 yen. Basically, the market price tell you how much you need to spend on one currency in order to buy another. And what makes FX so unique? There's no central marketplace and no global central body governing the currency trading markets. Unlike traditional financial markets such as New York Stock Exchange, Hong Kong Exchange, SGX, whereby you trade your stock, all your orders are being processed or passed to the exchange for settlement. While for FX, they are trade over the counter, also known as OTC. And what it makes it so interesting is that FX price is quoted by all the major banks, but not all the banks will have the exact same price. And FX market operate 24 hours a day, 5 days a week, from Monday to Friday, any time of day you want to trade, you can actually trade. And for most currency, a FX transaction is known as spot, which consists of a 2-day settlement period known as T+2, which means that on the trade day itself, that is the day when you place your trade plus 2 more days to settlement. Slide 3, please. Okay. Next, let's have a look at the daily trading volume from FX market. As you can see from the diagram from the top left corner, FX is the most liquid financial market in the world. The average daily FX trading volume surpassed many times against other established exchange. In fact, it reached $6.6 trillion in April 2019, and based on the latest survey, the average daily trading volume reached a peak of $7.5 trillion as of April 2022. And for many of us Singaporean and local alike, You might not be aware that Singapore is in fact the third largest FX center globally after London and New York. And that's how big Singapore FX market is. Slide 4, please. Hold on. Next, you might be curious about what are the tradable FX currency pair, as there are more than 100 over different currency pair in the world. They are mainly categorized in 3 groups. There is the major, minor, and exotic. The first group will be the major pair that you can see on the screen. All these 7 major pairs are known as G7 currency. They represent the most traded currency, whereby they make up 80 to 85% of the global FX transaction. So coming to the second group, they are minor pair, also known as the crosses. If you have noticed, the US dollar is always included in the pairs of major, while the crosses bypass the US dollar. And for the last group, is known as the exotic pair. For the exotic pair, they are usually associated with the emerging market and the developing economy, whereby their currency are not in great demand or trade globally. As you can see from the chart, the most traded currency pair are the dollar against the euro, dollar against the Japanese yen, and US dollar against British pound. Slide 5, please. Okay, next I will share briefly more on the popular known currency pair. Firstly, the US dollar, commonly known as the greenback or the king dollar, is the most dominant and significant currency in the world right now. Many central banks use the US dollar as a reserve currency. The reserve status is largely based on the size and strength of the US economy and its financial market. Any movement in US will greatly impact major financial market and the other currencies that are correlated to them. Next, I will talk about the euro. The euro currency is used by 19 of the 27 EU member nations. Actually, euro tends to appreciate and depreciate in relation to the US dollar as well. Next, we come to the Japanese yen. Traditionally, yen is regarded as the safe haven currency and viewed by most investors as stable and will most likely retain their value compared to other currencies during volatile market conditions. It is also the most attractive option for carry trading. Due to low interest, usually traders will use yen to fund their purchase of higher yield currency. And lastly, GBP, also known as the British pound, sterling, some call it cable. It is the oldest currency in the world that is still being used actively and in tender since 1707. Next slide, 6-7. Next, I will talk about the FX terminology. You might be wondering what a pips is. Pip in short is known as a point in percentage. Pip represents the change in value between two currencies, which is the smallest increment of price movement a currency pair can make. For example, let's look at this euro dollar. The price at 1.1052 is increased by 1. That 1 pip. We usually look at the 4 decimal number, that is 2, which means the numeric 1 increased by 1 pip to 2, which indicate a 1 pip change. Secondly, let's look at this dollar yen. It actually decreased by 1 from 131.19 to 131.18. For yen, we actually look at the second decimal number. For the numeric 9, it decreased by 1 pip to 18. So this will actually indicate a 1 pip change. And for those who are wondering how to calculate the value of bits, actually we calculate it by the standard log multiplied by 1 pips, which will equal to a value of $10. So every 1 pip movement will be in favor of your trade. It will translate to a $10 profit, while every movement against your trade will be a $10 loss. It's so easy. And many who trade FX before might notice that nowadays FX rates are usually priced in 5 decimal number, also known as the fractional pips. Slide 7, please. Okay, we talk about the spread. Spread is the price difference between selling and buying a currency. Whenever you trade FX, you will see bid and ask price of a currency pair. The size of the spread is actually a very important factor for every investor, since they can represent the difference between making a profit, a small profit, or even losses. And it is the cost that you pay your broker for a trade you have made, which meant that the tighter the spread, the less you pay. Let us look at the diagram. For example, euro dollar, the bid price is at 1.36407, which is the market price that you can sell. And the ask price will be at 1.36425, sorry, 428, which is the market price that you can buy. And this difference between the ask and bid price will be the spread. In this case, the spread is at 2.1 pips. Something worth remember is that the wider the spread, the more the price has to move in order to result in a profit or a loss of a trade. Let's ensure that in MooMoo, we provide competitive spread to our client so that you can enjoy a lower cost to trade. Slide 8, please. Okay, next, let us look at the contract size for FX trading. The minimum trading volume for FX is known as micro lot, 0.01 lot, equivalent to 1,000 unit or $1,000 value. Using micro lot is a good start for beginner and newer who want to keep the risk to a minimum, but at the same time practice their trading strategy. When you become more comfortable trading FX, you may want to try using mini lot. That's 0.1 lot is equivalent to 1,000 unit or $1,000 value. Lastly, the standard lot size for FX trading is 1 lot, which is equivalent to 100,000 unit and $100,000 value. Trading with this size means that your account fund might fluctuate by $10 for every 1 pip movement. A large price movement might easily cause large losses while the market moves against your trade. And how does contract size matter? As you can see, FX are usually traded in lots. Keeping your lot size relative to your fund in your account will help you to preserve your trading capital fund and help you to continue trading for a longer term. Slide 9, please. Okay, actually you don't need a lot of capital to get started with FX trading due to the use of leverage. This very special features of using leverage is similar to a loan whereby you borrowing money from your broker in order to open a larger position that you normally able to do that. Usually you need to put up a percentage of your trading capital upfront that is known as the margin requirement to open a trade. For instance, a trader has $1,000 in an account. He can open up a 20,000 position by using just 1,000 as the required margin. He actually leverage his account by 20 times. Similarly, a trader can also open up a 100,000 position if he has only 1,000 fund in his account. As you can see, the leverage now has been increases to 100 times. So leverage gives you the ability to give out your position of a higher value greater than the available fund in your trading account. However, please be reminded that leverage can act as a double-edged sword, as it can both magnify both your gains and losses. Investors must be aware of the implication and overuse of leverage, which can significantly increase your risk of losing a large portion or all your investment fund. For our MooMoo ad client, we offer 5% margin requirement, which is 20 times leverage for most of our trading pairs, except for dollar Mexican, whereby a higher margin requirement of 8% is required. Slide 10. For FX, you can both buy and sell at the same time, whereby you expect the market to be bullish. Example will be you expect euro dollar to raise or is bullish about euro dollar, you can actually long and buy euro dollar at a lower price, and when the euro strengthen, sell it at a higher price to make the money. Vice versa, if you expect, for example, sterling dollar to fall or is bearish about sterling dollar, you can actually short it or sell it at a higher price, and when the sterling weaken, buy it back at a lower price, so that this will become a profitable trade for you. Slide 11, please. Okay, how do you calculate the profit and loss, which is P&L for your FX trade? Let us look at two scenarios. The first one, we sell or short $100,000 yen at 137.10 and buy back at 135.55. The formula is 100,000 times the difference between the buy and sell. Is equal to 155,000 yen. Because the yen is the quote currency, so we have to exchange it back to US dollar, which equivalent to about $1,000+ in USD. And the second scenario will be that you long 100,000 Aussie dollar at 0.663 and sell back at 0.6585. The formula will be quite similar. You have to take the 100K times the difference between the bid and ask, and it will be equivalent to a loss of 450. Slide 12, please. Okay, swap, also known as the overnight interest, is the interest charged for position that are held overnight. The reason that you are essentially borrowing fund to open up a trade, the swap rate might vary depend on the direction of the trade. It can be either negative or positive. In other words, you will either have to pay a fee or you will be pay a fee for holding your position overnight. Sounds complicated? No worries. Just look at this example. We long 0.1 lot euro dollar, and the swap rate for the long side will be at negative 3.91, and for the short side is 2.68 positive. So the formula will be that you take the lot size 0.1 times 100K times the tick, divide by 10, and times the swap point, and times for 1 day swap. So it will be equivalent to a negative 0.39 USD dollar. And something to take note, when you hold your position overnight and it fall on the day that FX market is closed over the weekend, weekend swap as compared to a normal daily swap charge are 3 times more than you normally do when you hold any overnight position. Slide 13, please. Okay, margin call is when the fund in your account drop below the margin requirement and is insufficient to keep your trade open. You will be alerted to margin call as your position become at risk of being closed or liquidated. Two ways to rectify this margin call. Firstly, deposit fresh fund to increase the margin level above the margin requirement within 48 hours. That is T+2. Secondly, close or reduce any of your existing open position to free up the required margin. Slide 14, please. Okay, and example of what happened when your account actually trigger this margin call. You will receive an email notification informing you that your account has unfortunately triggered margin call, and you need to top up the required amount in the email, and at the same time the MooMoo app will notify you on this as well. Slide 15, please. Okay, this is a scenario when your account trigger a forced liquidation. This happen when your equity fall below 50% of your margin requirement. And the second scenario will be that you remain on margin call constantly for 48 hours and you fail to respond it to the margin call, the system will actually automatically execute and close your existing position at the next best market price. Something to highlight, depending on the size and unrealized P&L of the open position, all your open position might be liquidated in order to meet the margin requirements. In most cases, these positions are sold at a loss, which can be significant. Okay, slide 16. Okay, this is something similar to the margin call. This is what happened when your account go into liquidation. Similarly, you will receive an email notification informing you that your account has reached liquidation level. At the same time, the MooMoo app will also notify you on this. Slide 17. Okay, next I will share brief about the common risk factor about FX trading and what to look out for. Firstly, the interest rate risk. Interest rate and exchange rate are intercorrelated. Central bank interest rate policy can give rise to a higher volatility in the FX market. So please be aware of that. And liquidity risk is something that you can't buy or sell an asset quickly enough to prevent a loss when the market moves against you. So although FX is a highly liquid market, there can be period of thin liquidity during uncertain market conditions such as major country or currency holiday or due to specific government policy. Next, market risk will refer to the uncertainty associated with the price volatility. It often arises due to unanticipated fluctuation in various microeconomic factors that commonly affect the entire financial market. In such event, it's fairly common to see a price slippage to occur. Whereby when you place an order, ever the order is executed or closed at a different rate, or you will see a price gap that you have initially set. So this is what happens when price slippage happen. And lastly, the country risk refer to a risk associated with a country, major social conflict, political instability, and any adverse financial situation that can result in extreme volatility in certain currency. A relevant example in today's context would be the recent Russian invasion on Ukraine. Slide 18, please. As a beginner, you might not understand fully on how leverage actually work. Therefore, it's important to come up a risk management strategy before you actually start. As the level of risk might be too high compared to your market knowledge and trading ability. Instead, you might want to minimize your risk exposure by testing in a small scale situation first, such as trading your micro or mini position. Ideally, everyone wants their profit to outweigh the losses, but we can do this by setting a risk-reward ratio to quantify the worth of a trade. For example, the maximum potential loss or the risk on the trade that you can take is $200, and the maximum potential gain is $600. The risk-reward ratio will be 1:3. Next, just use stop and limit to assist you to decide on the entry and exit point of your trade before you open up a position. As a common trading mistake that many investors will make are holding on too long for their losses on their position. Therefore, it is critical to build a good trading plan to set a limit on how much losses you can accept to loss. Slide 19, please. Okay. Advantages of trading with MooMoo FX. Firstly, we have segregated client account, so your funds are segregated from any company usage. And secondly, we have a fast and stable trading environment that is using the MooMoo app. Thirdly, we have a tight ultra thin spread. Fourthly, we are having close relationship with this top tier institution whereby they plus plenty ample of liquidity. And the fifth one will be we have a dedicated customer service that is available 24/5. And the sixth reason is that we are regulated by MAS, so your fund is definitely safe with us. 7, and it's a $0 commission that we are offered to our client. Okay, and I come to the end of my session. Hopefully, this has been an informative and eventful session for you. Thank you. Back to you, Olivia.
Thank you for that important sharing, Samson. Now it's time to open your MooMoo Trading app and follow our next expert's guidance as we do a live demonstration on how you can access these features and place a trade. Now, before Brandon comes on, here's a short video made just for you. Enjoy it.
Hi all. Yep, so for just now the video, what we see just now is three things. The first thing is how to open the MooMoo account. Secondly is how to transfer make your first deposit into the MooMoo account. And lastly, how to transfer from a universal account to your Forex account. So today, I shall do a live demo on two things. The first one is how to transfer from your universal account to this Forex account. And secondly, how to place your first trade. So once you log into the MooMoo app, you go into your watch list over here. The next thing you need to press is trade. After that, you click on this universal account. So once you click on it, okay, you will see this cash transfer at the bottom of the screen here. So you click on this cash transfer, you will see this MooMoo Singapore cash transfer over here. And they ask you to select your transfer currency. What you need to do is to click on this USD over here. From here, you can see two things. First, they ask you to transfer out your funds. So when you first deposit into your account, MooMoo at the time, you will see this, your funds will be plugged into this security universal account. So you need to transfer these funds from this security account to this Forex account over here. You see a Forex here at the bottom of the screen. Okay, then next you just need to click the amount you want to transfer. Let's say I want to transfer 100 USD. Okay, after that, you just need to press submit. Okay, so they ask you to key in your trading password. You will set a trading password when you first open the account. So you will see that there is this $100 transfer from this security account to your Forex account instantly. So you just press the finish button and you realize that your total asset over here in your security account here has decreased by $100. And you go to this Forex over here, actually increased by $100. Okay, so the next, to do a first trade on this MooMoo app, what you need to do is go to this market over here. Okay, after that, scroll down. you will see this tradable pairs, currency pairs. So you click on it, you can actually see 36 currencies pairs over here. So let's say I want to do my first trade on, let's say, euro dollar example. Okay, so on this euro dollar screen over here, you'll see a few things. The first thing you need to take note, the most important thing is the bid side and the offer side. So this is the spread that we offer to our clients over here. And secondly, all these charts for our traders, our clients to see how to trade. For example, they can look at the intraday, 5-day chart, 1-day chart, so on and so forth. And they can also customize what they want to see in their chart via this indicator over here. So just need to press this over here. Sorry, they just need to press this over here and press indicator. So let's say they want to add MACD or they want to add Bollinger Band, they can just do it on the app itself. So they can customize what they want to see on this app. Okay, so you can also click on this button over here, this dollar sign over here. There's the details over here. You can see what are the contract details. For example, what's the minimum volume? 1,000, 0.01 lot, or the maximum volume, and what is the stop level and the freeze level. Next, you can see your margin requirement, your leverage, and your swap point over here. So next, we will look at this, how to do a first trade over here. So there is this open and close button over here. So to open a trade, you just click on this open. Okay, then you will see a few details over here. Let's say I'm going to place a market trade over here. Okay, then the price you can see at the bottom over here. And next one, you just press, let's say I'm going to trade 0.01 lot, which is 1,000, the minimum. Here you can also see your initial margin that you need to post when you do your first trade over here. So you just click buy to open. You click your MooMoo trading password. Then this trade is being unlocked. What you need to do is click again, then press continue and confirm. So this trade is submitted. Yeah, so this concludes the end of this live demo on how to do the live trade for this MooMoo app itself. Thank you.
Thank you so much, Brandon, for that. Now, we've got a lot of questions already about your comprehensive tutorial. We look forward to the next one, or a part 2 or part 3 for the future shows. Now, I would like to invite all gentlemen back into the room so that we can answer the most exciting parts of the show. Every show, we've got lots of questions. So I picked the top questions for our experts today. Welcome back.
Hi, Olivia.
Hi.
Hello. Okay, so I'm just going to dive straight into it. The first question, what is the leverage you're allowing in Singapore?
Yeah, according to MLS regulation, we allow 20 times leverage.
Okay, thank you. Next question, how can we use this FX trading tool to hedge against the currency exchange risk when we invest in the US market while we are in Singapore? And part 2, is it expensive to hedge for the upcoming years? Who would like to take it?
So can you repeat the question again?
Sure. So the first part of the question is, how can we use this FX trading tool to hedge against currency exchange risk when we invest in the US market while we are in Singapore? And part 2, is it going to be very expensive to hedge in the upcoming years?
Okay, I think the main thing about this platform is not to use it to hedge against your risk exposure. For example, let's say I buy a US stock, for example. So I don't think we'll be using this platform here to hedge it against what you buy in the US platform. So I think it's two different things.
Yes, just to add in, I think this LFX leverage Forex itself, generally, I think if you look at the daily turnover is actually 7.5 trillion US dollar. Volatility will be there. I mean, you're talking about in terms of spreads, in terms of pips. The movement will move accordingly. I mean, especially if you have big events. I believe Brandon Samson will agree that events like FOMC, depending on which pair you're talking about, in Europe pair, any big events over there will be huge volatility. So it will be for near term gain, or if you talk about Olivia, I mean, coming back over to your hedging, it will be more towards the near-term hedging itself. In terms of maybe clients has, for example, bought a US dollar or converted US dollar at a lower rate. And within the day itself, there's some news that resulted in the strengthening in terms of US dollar. That will be something that clients will be able to take advantage of. Maybe just another part of your questions is, you know, for new clients, for any clients who trade FX, there's no commission. Unlike stocks, there's no exchange clearing fee, nothing. I mean, everything, you know, all these fees, they are all input, or rather they are factored into the spread. So the spread difference is something that clients has already, you know, in terms of the fee has already factored in and clients has already paid for. So I could say FX will be cleaner. I mean, in terms of from a fee point of view. So that will be something that you know, also one of the main reasons we felt that it will be useful for clients in terms of you know, given that market may be more volatile and clients may be able to take something to protect them further. Yeah.
Thank you for that. The next question is directed to Gavin. So someone on YouTube Live would like to ask you, when we trade FX on MooMoo platform, is MooMoo the market maker for this? And how do you compare to the others out there?
Well, I mean, this is thanks a lot, Olivia. This is a very sensitive question. I mean, generally, I think if you talk about comparison, I together with the FX department itself, we always skew towards having the tighter spread. But I put it in this way. I mean, based on you know, how we want to put it out is we are not market making. As shared, we don't have a dealer desk. We do have a dealer desk, but we don't have a trader desk. So we are not market making. We are just sending the orders to all the major banks that we are working with, and hopefully with the banks that we are working with, they are able to provide the best rate that clients will like to have on, and that is where I could say from MooMoo Singapore, we are more towards you know, providing from a platform and linking up STP, straight through processing, to all the major banks. So there is very little human intervention unless there's some disconnectivity. So yes, hopefully I answered the question. Yeah, Olivia.
Yes, thank you, Gavin. Okay, the next one is about margin. So Brandon, Samson, you can take this one. What is the margin offered here?
Sorry, I didn't catch the question.
What is the margin offered here?
We are offering a 5% margin for most of our currency. Which is equivalent to a 20 times leverage.
So to add on,
so it's a 20 times. Yeah, Brandon, sorry. Yeah, please go ahead.
So to add on, 5% is for those major currencies. Some currencies that are a bit riskier, like a Mexican currency, is 8%.
Thank you for clarifying that. Gavin, you had something to add?
Oh no, I mean, I just want to add on what Samson and Brandon has shared. I mean, so if you look at how you define, you know, 5% is generally, you know, take 100 divided by 5. That's the leverage time. So it's 20 times over here. Yeah, for most of the pairs that we are seeing in terms of the FX itself.
Thank you. Next question. We've got a lot of questions, but I picked at least the top 10. So the next one, open it to the floor. The margin to maintain is based on the fund in the FX account only, or the sum of all funds in all accounts, including universal account?
Okay, actually, we have a separate FX account from the universal account. So what you need to do is just to maintain the fund in the FX account.
So meaning, if let's say you have $1,000 in your this FX account itself, and let's say you got a margin call, so you need to have some funds to put into this FX account. You can also transfer from security accounts to this FX account itself. Yeah, so the funds are all you can just transfer over once if there's a margin call, or let's say you want to trade more. Yeah, you can also transfer back from this Forex account to this security account if you think that you want to trade stocks more.
Yes, so to answer you, Olivia, I mean, generally, it will be to the FX account, and so it's a standalone. And this is actually also to mitigate individual clients' risk also.
Mm-hmm. Thank you. Next question will be based on New York time. So someone wants to know what time does the daily chart start as for New York time, and will it be 5 days per week?
Yes, so for our this chart itself, if it's referring to the chart, our chart are all 24 hours for 7 days itself, but our trading it's for 24/5. But actually, the Forex market is actually a 24/7 market. However, on Saturday and Sunday itself, the liquidity it's not very good. So traders do not normally do not trade on Saturday and Sunday. Yeah, so they mostly trade from Monday to Friday, including the New York time, which is usually more active because there is more news on the New York side. Yeah, so our chart is 24 to 24 hours times 7 days, in fact. Yeah, but the trading, the regular trading pattern is from this 24 times 5.
Mm-hmm. Thanks
Yes.
for that.
Yeah.
And
Add on, yeah, just to add on what Brandon had shared was that yeah, I mean totally agree. I think if you look at the weekends, if I remember correctly, that would be more towards the Middle East where there's trading. But if all of us know any trades that is done on the weekend, generally the spread would be wider. So but of course, I mean as for us itself, it is actually 24/7. So of course, like what Brandon has shared, you know, it also depends on the pairs that we are trading. So if you're talking about US Euro, I mean, it will be based on Euro timing. Euro markets open 2 o'clock Singapore timing. So it really depends on what pairs that clients are looking at.
Mm-hmm. Thank you. This question is for Gavin, but of course the other two gentlemen can also take it. May I know whether you have plans to have XAU USD available in the near future?
Yes, generally, I mean, this will be a soft launch. We will do it better. We will add in more pairs. We will make it even you know, better surely. So answer is yes. We will look into that. And you know, feel free. I mean, clients out there. I mean, any requests, any demands, feel free to flow it in. I mean, in different channels. We will look into it, and you know, we will study it carefully.
Mm-hmm. And just additionally, do you think it will bring in other pairs like for gold?
Yes, definitely. It's still in the plan.
Mm-hmm. Exciting. I know this is like what Gavin mentioned, a soft launch, and also we're doing an introduction, right? Introducing these new features that we have on our app. And as Gavin mentioned as well, the team works very hard to come up with new features for you, and a lot of things are ongoing at the moment. So I know I have a lot of questions regarding this, but stay tuned because we'll have more content like this whenever we do a new launch. Next question is about the FX liquidity providers. Now, anyone can take this. Could you clarify who exactly are the FX liquidity providers?
Sure. Maybe I will just take this. I got to say is I believe Brandon and Samson feel free to add in, but I think first of all, what we want to say is we are working with all major banks. Is PNC with regards to who are LPs of, but all generally our LPs are all big banks, and it has gone through a lot of discussion, a lot of understanding from each other, and I think if you look at how the FX department or even us itself. We are also, many of us have a previous FX experience in terms of building up the business. So we are also building on that experience and bringing it over so that we can build a better FX platform for all clients in MooMoo SG.
Mm-hmm. Thank you for that. Yes, even Brandon mentioned about his experience in FX too, right, earlier? So, you know, we have a solid team right here. Thank you for that. So last two questions. So the first one is, what are the risks associated with this, and what is the process to withdraw if I want for my FX account? And could you just highlight the risks and opportunities?
Yes, the risk is actually quite various risk that I would say, because as I said before, FX is actually quite depend on the US dollar. As you can see, most of the currency pair is associated with US dollar. So what US central bank which is known as the US Fed, might have special policy for their interest rate, it will definitely impact the whole market as a whole. So this is the type of risk that we are facing, whereby we can't predict what they are going to do next for their policy. So what we can do is probably look out for the news for them and see the market sentiments on that.
Thank
Yeah.
you. Well,
So
I've got-
to
Mhm.
Yeah, so to add on, just now, I think one of the questions also posted that how they do the withdrawal. So I think the withdrawal can be done through this MooMoo app itself. It's the same as how you deposit. You can also withdraw it easily.
And this person also clarified that they have universal and FX accounts. So based on experts like yourself, what would you suggest would be the way forward?
It really depends on what the clients want to trade. Some of them maybe are more stock active. Some of them are they know Forex more and they want to trade Forex more. Yeah. So the parking of this account is all into this universal account for security side. So as and when they just want to transfer to Forex, they can just transfer it easily. Yeah.
Okay, thank you for that. Last one would be more the technical side and doing things on the app. So could you explain further on the TP and SL? And is it easy to adjust these two components?
Yeah. So when you place a trade itself into the system, okay, let's say you buy a euro dollar at current rate 1.06 example. So when you place an order to, let's say, sell the euro dollar, you can just actually place a market order. Concurrently, when you place the buy order at 1.06, you can actually place a stop loss and I can place a take profit level on the app itself. Yeah, but do take note, the difference you can only place on based on 20 pips differences. That means let's say the market is doing at this 1.0000, 1.40. Yeah, so you can only place your order at 1.0002. Yeah, so meaning that there's a 20 pips in between. Yeah, for this for any limit order itself.
Okay, thank you for that. Well,
Just to add on is actually 2 pips away.
So, I mean, these tutorials will always be online and they've got courses available. And of course, I've got some questions whether or not we'll make these slides public, especially what Samson shared earlier. Well, the slides will not be made public, but you can watch the replays on all our social channels. Later on, we'll share a QR code so that you can be in the know and replay and rewatch if you want or missed out anything from today. Someone also said, can you add a tutorial on how it works? We just had several videos that we played to show you the basics. And of course, Brandon covered the core of how you can actually place a trade. So if you want to rewatch that, please do so after the show ends. Okay, so that's all we have for time and questions. Gavin, Brandon, Samson, what are your last takeaways before we leave the audience? Gavin?
Yes, I mean, we hope that we have spent a lot of time, a lot of hard work, really, I mean, effort to the guys who are all involved in this FX marketing side. I mean, we really hope that this is a product that clients will buy. And maybe I just want to add on is really hope that clients can try it out. I mean, transfer a little bit. I mean, the FX side, FX account, try it out. We look forward to more feedbacks. And as shared previously, I mean, we will do more and we will make it even better. So we hope that this will be something that clients will look into and will carry on trading in. Yeah. So yeah, I mean, happy trading in terms of FX itself. Yeah.
Thank you, Gavin. Brandon, what about yourself?
Yeah, for me, I do wish to see the clients trading on the app itself and do give us feedbacks on the app so that we can improve ourselves and give a better app experience to all of you. Thank you.
Thank you. And of course, Samson, to end off.
Okay, something that I want to emphasize again, FX trading carry many risks and so might not be suitable for all investors. adverse condition may result in a loss of all your funds. So please be cautious, but just give it a try. You can try trading micro lots. Yeah, that's all. Thank you.
Excellent. Well, thank you, gentlemen, for being on the show. And I know Brandon and Samson, it's your first time, but we look forward to the future shows that we're going to have together. See you next time.
See you.
See you. Thank you.
Thank you.
Bye.
Bye-bye.
Now, to the audience, I know you have a lot more questions, and even when I ended, the questions kept flooding in. Now, if you have more questions, remember that you can still email us right here so that the team can help you. We've dropped in that client email, so any more questions, or like Brandon mentioned, ways to improve, any sort of feedback that you have, you can email us right here. Now, we've just started the year and we can't wait to show you on all the upcoming content that we are crafting and curating for you. Now, do check out all the other channels and main shows that we have, and a lot of questions on the replay of this. You can watch it right after this on our YouTube, Facebook, or in-app, okay? So as usual, these webinars are a chance for you to connect with our experts, as we see that as a bridge to knowledge and to help you and guide you in making better investment decisions. Now, it's always a pleasure to have you with us. We'll see you for the next show. Signing off, I'm Olivia Higgins, and as always, have a profitable day.